Welcome back. You're watching Market Fatafat on ET Now, a show where we get you all the stocks buzzing based on news flow as well as on technicals. And talking about technicals, we're now joined by Foram Chheda on the show. Very good afternoon to you, Foram. Thank you so much for joining us on ET Now. And the first stock that you'll be talking about is Jubilant Foods. How is this point looking on the charts? Do you think it's worth taking a bite out of this big pizza pie right now?
Again, you had to talk about pizzas, though. I have become very hungry. Foram, hope you can at least sit and order that pizza right now.
Definitely. Good afternoon. And since I'm at home, I can definitely have one. Well, to begin on Jubilant Foods, so technically since the month of Feb, the stock price is consolidating in a range of 418 to around 465. Currently, in the beginning of this month, we have seen the stock price breaking out, and along with that, the stock price is now making an attempt to move above the 100-day moving average. And this price action has been supported by an increase in volume. So the overall stock is looking good at current levels. One can maintain a stop loss below the levels of 460 and look for a higher target between 500 to around 505.
On to the next stock, and Harsh, GMR Power is the stock that you picked out. This one will focus on the back of its numbers as well.
Yes, absolutely, Vinny. So we're looking at revenue, which has gone slightly higher when I'm looking at it on year-on-year basis. It's come in at 1430 crore versus the 1210 crore number same time last year. What we're also seeing though is that on a sequential basis, revenue has actually declined. So there's been a bit of a compression there. Let's also look at EBITDA. EBITDA has come in at roughly 57 crore rupees, 58 crore rupees, which is a downtake of around 60% on a sequential basis and a 30% downtake on a year-on-year basis. So we're clearly seeing pressure on margins. And when I'm looking at EBITDA, even for the full year, it's come actually lower despite revenue actually going up. So that's one piece which will remain at the back of most investors' minds. What we're also looking at in terms of losses, we're looking at a loss in Q4 of 470 crore versus a gain of around 340 crore in Q3 of FY23 and a loss of around 270 crore in Q4. So the loss is actually widening in this particular quarter, but overall on a year on a full year basis, the losses have actually come off. In fact, it's become profitable. So that's a positive.
Let's move on to the next one, and we have Schneider Electric. That one is in focus on the back of its numbers. When you look at the revenues, we're seeing a growth of around 20.7% on a year-on-year basis, and it's at around 411 crores. EBITDA performance also strong EBITDA performance there, because 61 crores is what the EBITDA has come in at versus just 17 crores. That's an uptick of 260% on a year-on-year basis. Margins at 14.8% versus 15%, 986 basis point expansion in terms of margins. And obviously that is why the main reason that we're seeing coming in for the increase in the stock price as well, 15% uptick there. Bottom line also a very strong growth over there as well. The net profits are at 45 crores versus just around 7 lakh rupees last year as well. Strong performance by Schneider Electric, 15% uptick on the stock as of now.
All right, moving on, let's talk about Lindy India, and that particular counter is in focus in today's trading session. If you look at one point in time, the stock saw an uptick of about 4.5%, now holding on to gains about 3.5% or so. The company reported a 51% rise, year-on-year rise in their Q4 consolidated profit. If you look at the revenue from operations, came in higher by about 18%. The core profit of the company also saw an uptick of about 41% on a year-on-year basis, and the core profit margin expanded to 29.5% from 24.6%. Apart from that, the company also approved a total dividend of about 12 rupees per share, inclusive of a special dividend of about 7.5 rupee per share. So on back of good set of numbers coming in, also dividend approval, you can see India holding on to good gains, about 3.5% as we speak.
Let's move on and talk about Bharat Dynamics on the charts then. Foram, what are the indications on the charts for this one? It's remained almost flattish in the last 5 days in terms of trade. Even in the last 1 month, actually, look at it, 8% gains. What should we be expecting from this one now?
Well, technically, one is the entire sector has taken up a lot of momentum in the past few months. After a formation of a double bottom in the month of March, the stock price has witnessed a decent up move. However, this up move has been part of a longer or a larger consolidation pattern. Last week, the stock price did make a breakout from this nearly 8-month consolidation. So if you look at it, there has been a very long consolidation and the stock price is just breaking out. Thus, this price breakout from this long consolidation indicates a lot of potential upside from a longer term perspective as well. But since in the near term, the stock price is very close to the breakout level, it becomes a buy at current levels. One can even look at maintaining a stop loss below the levels of 1029 and can expect an upside target of 1140 from a trading perspective. That's on 1 to 2 months. But even if one has to hold for 6 months, they can look for higher targets as well.
All right, moving on then, Ankita, let's talk about Amara Raja. Why is this one in focus?
Amara Raja is in focus on the back of earnings and an announcement that came in. First up, let's look at their earnings. They announced a 41% year-on-year jump in the consolidated net profit, which came in at 139 crores. The company also saw the revenues from operations rise by 11% on the year-on-year basis to 2,400 crores compared to 2,100 crores last year. Also, news came in that Amara Raja will be buying the Amara Raja power from the Rangla family. They will be buying 100% stake of Amara Raja power system, and it's going to be likely to cost 133 crores. And on the back of that news, Amara Raja is in focus and is down 2% in trade today. Let's move on to the next stock, and Harsh, JSW Energy also in focus on the back of its numbers.
Yes, absolutely, Vinny. So we're seeing that there's clearly an expansion when it comes to the Q4 revenue. It's gone up from 2,600 odd crore to 2,800 crore, so around 5% to 6% odd uptick. We're looking at EBITDA though, which has actually come down, but there were certain one-offs in last year's EBITDA. So on a normalized basis, on an adjusted basis, EBITDA has actually gone up. We're seeing EBITDA go up by around 7 odd percent, which is broadly the same range. We're seeing EBITDA come in at 881 crore versus the 821 crore number. Even EBITDA margins therefore contracted a wee bit from the 39% mark to the 31% mark, and broadly profit after tax is actually down on the back of certain exceptional items. It's actually down from 864 crore to 272 crore. So we're seeing a strong downtick on the basis of one-offs, but largely otherwise outside of those one-offs are largely stable set from JSW Energy, and you can see that reaction on the stock price as well.
Right, shortly we will address the Hindalco numbers that have just been released, but we'll wait for some more time to talk about that one. But in that time, Foram, Oil India, how is it looking on the charts to you?
Oil India has been outperforming the benchmark index, and yesterday the stock price did make a breakout from a technical pattern of a symmetrical triangle. The breakout in this stock was backed by a good increase in volume. Interestingly, the stock price, when it was even consolidating, was consistently taking support on a 100-day moving average and a 50-day moving average. So it was indicating a good uptrend in the stock. So even one can look at buying at current levels, maintain a stop loss below the levels of around 260, and can look for a higher target of around 280 to around 280.
Okay, let's move on then and actually look at Metro Brands quickly, because that one is in focus on the back of its numbers as well. A weak set of numbers is what came in from the company because we're seeing that the profits have mildly seen a decline. Margins, nothing exciting there, 26.47% versus 32.26%. But furthermore, we spoke to the management of the company, and to just understand in terms of that as well, why was there a weakness in margins? Let's go across and listen into this conversation.
Very comfortable guiding to 30% plus. Every now and then you're going to see a quarter blip up or blip down. This quarter blip down because, as you rightly pointed out, this is a slightly lower gross margin quarter due to end of season sales and clearing. Though we're very proud of our gross margin number for the quarter, it still is one of those quarters where that dips down. We also are investing in marketing, we're investing in travel, we're investing in some step-up costs that come with expansion, that come with managing a business. So some of that EBITDA that you're seeing happening is actually an eventful thing that happens on a Q basis. But for the year, we feel very confident guiding that our EBITDA, as it has historically been, is going to guide over 30%.
All right, let's mark the Hindalco numbers then that are flashing on the bottom of your screen. Remember, the numbers are above our estimates. So be it revenue, EBITDA, profit, margins, all of them are above estimates. And you can see the spike in the stock price as well. Net profit has seen an uptick of about 67.1% on a quarter-on-quarter basis, coming in at around 832 crore rupees. If you look at the revenue, it's seen a healthy uptick of about 5.3%, coming in at around 19,995 crore rupees. This is on a QOQ basis. If you look at the EBITDA margin and expansion on that particular front as well, the EBITDA margins has come in at around 8.9% versus 7.1% a quarter ago, and EBITDA also seen an uptick of about 32% on a quarter-on-quarter basis, coming in at around 1,775 crore rupees. We'll watch out for management commentary, but for now, Vinny, if you look at the numbers, definitely better than what we had anticipated. At least the profit on a quarter-on-quarter basis also seeing a good uptick.
Absolutely, and let's not forget some of the factors that come into play for this number is, the aluminium prices also. When you look at it, aluminium prices have risen by 3% quarter-on-quarter basis, which will result in higher realizations as well. So when you look at it in terms of the revenues of the company, quarter-on-quarter basis, we are seeing a decline of
Uptick.
an uptick of 1% on a quarter-on-quarter basis. Let's keep an eye out on that. But yes, other than that, copper prices, copper per ton has also remained, EBITDA per ton has remained flat. Aluminium EBITDA is also almost seen a good jump as well. So we're keeping an eye out on these aluminium numbers, which are, keeping a bit of a positive up move is what we are understanding in terms of, the factors that we were watching out over there as well.
We'll just get some more finer details for now. If you look at the numbers, they are looking a healthy uptick on a quarter-on-quarter basis in the PAT. The revenue also is seeing an uptick on a quarter-on-quarter basis of about 5%. The margins have seen an expansion as well. The margins is coming at about 8.9% versus 7.1%. And if you look at the scorecard, then you had the revenue and the PAT are above ET now estimates, while the EBITDA and EBITDA margin are below ET now estimates. So that's Hindalco for you. The stock is reacting to those numbers. It did see a recovery, but right now, if you see the stock, it is actually seeing a tad bit of decline from those elevated levels that it had shown right after the earnings.
A slight bit of a miss that we're seeing on the EBITDA and margin front from what we were
operational
seeing.
performance, yes.
Because the top line, bottom line was good as of now is what we're understanding. But okay, let's move on then and keep it going with all the other stocks that are buzzing in trade. And Foram, Kaplan Point is the stock that you've picked out for us on the charts. What are we expecting here in terms of the targets?
Well, the stock price from the lowest that was in the month of March was around 584. The stock price has already rallied up to around 735. But when the stock price has reached at this level, it is actually giving a breakout from an inverted head and shoulder pattern. The neckline was at around 722. So before that, the stock price was at a downtrend, but in spite of having a good up move in the past 1.5 months, even now it indicates a good buy. Usually the breakout from an inverted head and shoulder is more of a bullish reversal pattern, and it indicates a potential up move from here on as well. And before the breakout, there was an accumulation in the volume observed, which supports the bullish up move that we are expecting in the stock. And importantly, the stock price has surpassed its important moving average of a 200-day. So when the stock price is crossing above the 200-day moving average, it's indicating the underlying trend is turning bullish. So overall, the stock is good, and one can look at buying at current levels, maintain a stop loss below the levels of 704, and one can expect an upside target of closer to 760.
Alright, that's Kaplan Point for you, and Hindalco right now is trying to break into the positive territory post the earnings. Remember, the revenue and the profit have come in above the estimates, while the operational performance has missed the estimates, but nevertheless on a quarter-on-quarter basis on all parameters the company has performed well. But let's talk about CG Consumer. CG Consumer is the stock they're talking about. And that particular counter is in focus because it saw a block deal take place of approximately 1% equity, which translates to about 65.3 lakh shares. That's what the amount of shares that changed hand via block deal. And post that particular block deal, we saw the stock soar in trade, taking the stock to the highest level since April 25th. And remember that this is the fourth consecutive day of gains coming in for CG Consumer. However, the buyers and the sellers in this block deal is not known. But yes, tomorrow one stock to take definitely will be CG Consumer, Vinny, because we'll have the details about who are the buyers and the sellers in this block deal.
Absolutely, and I'm just going to start writing the name as of now and booking in my name. But okay, let's watch out for that one. Foram, On the charts, Delta Corp, I think a lot of analysts have, technical analysts have started picking this one up. What is so interesting in this one? What are the charts indicating for this one?
Well, it's absolutely interesting, and it's like after consolidating for nearly a year, the stock price is now on the verge of marking a 52-week high. With a recent up move, the stock price has witnessed a very consistent and a gradual formation of higher top and higher bottom. And with the stock moving above the important moving averages as well, the overall trend of the stock is turning bullish. So as you said, a lot of technical analysts are picking up, and hence these are some certain parameters, the basic parameters, and hence it's looking good. Thus, from a longer term perspective also, the current levels do look quite attractive to buy. And from a 1 month perspective, one can look at buying the stock at current levels at around 230, maintain a stop loss at around 218, and look for an upside target of closer to 254.
All right, moving on then, Ankita, Bhikari Foods, this one is on focus on back of its earnings.
That's correct. It is in focus on the back of its earnings. And if you look at the earnings, the profits have come in at 57% higher on a year-on-year basis. The revenues are up 15% at 462 crores on a year-on-year basis. The EBITDA margin has come in at 13.3%. That is up 334 basis points on a year-on-year basis. And we also had the management come on ET Now, and they said that deflation in the raw material margins is aiding their margins. They're also seeing a growth going forward will be both in terms of volumes and value-led growth. Also, currently 58% of the sales are coming through their large packs, and they expect it to be at 55% going forward. And they also expect the revenue to grow at a faster pace than 20%. And on the back of that, Bhikari is going to be in focus today.
Let's move on and talk about Asian Paints, and this one Forum. When you look at the charts, Asian Paints was not one of those outperformance coming in there. It had been quite subtle and subdued for a while now. Finally, an uptick is what we could expect from Asian Paints.
Yes, well, as far as Asian Paint is concerned, it's seen a very gradual and a consistent way of moving up higher from the since March lows actually. So in fact, the stock price tested 2,700 multiple times before it could move up higher, that is in the month of April. Now, after a steep rise, we have seen that the stock price has moved above the 200-day moving average. As I was talking previously, that it's quite important for the stock to move above a 200-day moving average, which adds on to the bullishness of the stock. And now currently from the past few trading sessions, after this decline, we've seen a corrective decline coming in. This decline is taking support at the same 200-day moving average. So that is quite important, and from there we are seeing a resumption of an up move. So this resumption is indicating that one can look at buying at current levels because it's quite a favorable risk-reward ratio. So one can look at buying the stock at current levels, maintain a stop loss below 3045, and one can look for a target of closer to 3240.
Moving on, Harsh, let's talk about Mahindra CIE. We all know that there was a block deal that took place. So what are the finer details?
Well, yes, M&M have sold the 3.2% stake in Mahindra CIE. Now, mind you, as of March, the holding that M&M had in Mahindra CIE was 3.2%. So they've completely exited the stock. With regard to, of course, the number or the value at which they've sold, not exactly certain yet, but they had set an offer price of 430 to 453 rupees, and they were seeking to raise around 520 crore rupees from this sale. Kotak was the broker, and 1.2 crore shares sold, 3.2%, fully exiting Mahindra CIE.
I want to talk about Stovecraft. This is an interesting one coming in on your list. What are the targets that you're keeping an eye out for this one, Foram?
Well, technically speaking on Stovecraft, the stock is now picking up some momentum. It did give a breakout from an inverted head and shoulder pattern at around 458 to around 459. The current price is trading at around 488, so it's already picking up some momentum. But from the lows of around 353 in March, the stock price moves up with a very consistent increase in volume, which makes the stock look quite bullish. Lastly, from a clear downtrend, the stock price has witnessed a transition and has started moving in an uptrend. So the stock looks quite good, and with this increase in volume and an indicator like RSI, that is a relative strength index, is already indicating a bullish divergence. All this makes the stock look quite attractive at current levels, and one can maintain a stop loss below the levels of 451 and look for a higher target of closer to 510.
Then talk about Sequence Scientific on the back of its numbers. We're seeing clear weakness and the fall coming in the stock price after its numbers. Revenues were down by around 4.4%, what we look at it in terms of a year-on-year basis. In terms of the operating performance, weakness seen there as well, because EBITDA has only come in at 5.2 crores versus 33 crores last year, which is a downtick of 84%. Margins, clear pressure on that one as well, 1.42% versus 8.68%, and the company's losses have further widened to 92 crores versus a loss last year of just 9 crores. So clear pressure that we're seeing coming in on the overall performance of the company as well. And obviously when you look at just in terms of the disappointing quarter, margins were lower also because there was an ESOP cost that came into play as well. So keep an eye out on this stock, as of now trading at the day's lowest point, down 5%.
All right, moving on, Forum, let's talk about NIT Limited and how is this one looking at the charts?
Well, now this industry is picking up some momentum, and maybe yesterday we did see some selling pressure or a profit booking coming in, but the trend is changing there. So the stock has already made a breakout from one pattern of an inverted head and shoulder. Secondly, it is attempting to break out from another pattern of an upward rising channel. So from the past 2 to 3 trading sessions, there has been some accumulation seen on the volume perspective. And since the sector is picking up, it's already made a breakout from one pattern. It's attempting to make a breakout from a second pattern. Is indicating a lot of strength in the stock, and this increase in volume is adding further bullishness to the stock. So the overall stock looks good at current levels, that is of 393. One can even look at lower levels to add in more at around 389. Maintain a stop loss below 379, and one can look for a higher target of closer to 425.
Moving on, let's talk about India Cements. And India Cements actually came out with its numbers earlier today. It reported a wider fourth quarter loss. This is on back of raw material and fuel costs that surged in the quarter gone by. So loss before exceptional items and taxes deepened to about 128 crore rupees from a loss of about 36.5 crore rupees a year ago. The total expense also jumped by about 12.2%, led by an increase in the in the materials that are used, as well as the fuel costs. And on back of that dismal performance in the quarter gone by, you can see the stock is down about 2.8% as we speak.
Let's move on and talk about persistent systems on the charts then. And Forum, how are the indications? What is the target price that we should keep an eye out on this one? As of now, today it's quite subdued in trade. Last 1 month also, when you look at it, we have seen a slight and mild uptick coming in of around 12% uptick in the last 1 month. What furthermore can we expect in terms of targets here?
Well, as I previously mentioned, that the industry is picking up some momentum. So, as far as persistent system is concerned, on a weekly chart perspective, the stock price is already attempting to break out from its resistance level of 5,000. Currently, it's trading at around 4,968, but on a weekly close above 5,000, it is a clear breakout. But one can look at even buying at current levels. And secondly, there is like a parabolic SAR. It continues to remain in a buy mode. And since September last year, we have seen this stock is performing higher tops and higher bottoms on a weekly chart. So from a long-term perspective, or even from a 3 to 6 month perspective, the stock looks quite attractive at current levels to be bought. One can maintain a stop loss below 4770 and look for a higher target of closer to 5,330.
Moving on, Ankita, Biocon, this one is performing well on back of its earnings.
That's correct. It is performing well on the back of its earnings. And if you look at the earnings, the revenue from operations came in at 3,774 crores, up 56% on a year-on-year basis. The EBITDA was up 68%, and the margins also came in at 26% versus 24% last year. The net profit came up 30% on a year-on-year basis as well. Now, if you look at the numbers, then all the numbers were above street expectations. There was good beat on the margins and the PAT. And we also had, among the other highlights, it was the net R&D investment for the quarter grew by a good 79% to 342 crores, representing 12% of revenue of ex-Syngene. The muted growth in generics business was, however, a bit of a dampener on a year-on-year basis, and Biocon Biologics revenue for quarter 4 FY23 stood at 2,000 crores, up 114% on a year-on-year basis.
Okay, that was stock number 40 and the last stock for today. Thank you so much, Foram, Harsh, Ankita, as well as Sumit for joining with us this afternoon on Market Fatafat. And thank you so much, viewers, for tuning into Market Fatafat. It's a goodbye from Cheryl, myself, as well as the team who put this show together.